In today's video, we're talking about the EURUSD as it breaks its March trend line heading into that Fed rate decision and approaches a level that goes back decades. We're also seeing the DXY approach a critical area following that Monday rally and heading into that monthly close on Thursday. So we'll have all the details in today's video, including what I think we could get from these markets here over the coming days. Now, if you want my help with your trading, including real-time market updates, VIP-only videos, seeing my trades live, and also multiple updates throughout the day on Forex, crypto, commodities, and indices, be sure to check out the link in the description of this video for 85% off lifetime access to VIP. If you're on the website, click on that join VIP link. And as always, guys, if you're not happy with your purchase, within 7 days, just shoot me an email and I will refund every penny, no questions asked. All right, so looking at the EURUSD here, guys, daily time frame, you can see that clearly we have a breakdown this week of that March trend line. So we've discussed this before, but you can see here off of these lows, right? Very clearly, we have this trend line off of all these lows down here. And so far this week, we are getting a very convincing breakdown here from the euro. Okay, now this was tariff-related news. I'm not a fundamental trader, guys. I trade technicals only. So really, I know why this move happened, but to me, that's irrelevant just because the technicals, the chart is always going to tell you exactly what we're likely to see here from the market going forward. Now, of course, you're not always going to get it right, but the chart doesn't lie. Okay, so looking at the euro right now, we have the market clearly breaking that March trend line up here around 116.40 or so on Monday. And just to kind of recap, so you guys know, so over the weekend, I posted a few charts in the VIP Discord for members. And what I talked about there was the fact that we had these two imbalances back here. Okay, so just so you guys know, these white levels or gray levels up here, these are key levels, key price action levels. These blue dotted lines are what are called single prints in TPO terms or imbalances in the market. Now, these over here, okay, these two I want to focus on right now because we had these from this run up back here from the euro. So we had ranging price action back here. We had an expansion out of this range. The market never quite came back here toward this area. And so we had these imbalances down here right around 116.53 and 116.76. So this area down here lined up with that March trend line. Okay, so what I told VIP members over the weekend was that we could get the market rotating lower to start the week. Okay, the first 24 hours, this was my base case scenario to see the euro come down here and clean up this area. Now, I did not expect for the euro to punch through this level so easily because, first of all, this level goes back toward March, and we also had this area back here. Okay, so short-term horizontal through here. We also had those imbalances, which oftentimes do serve as support and resistance as well. So given all of that, guys, I did expect the euro to bounce more significantly from here to at least come back here and fill in those imbalances from Monday. All right, so I expected something more like this. If we were going to get the breakdown, of course, we got something totally different from the euro. The market just punched right through this level, and so far we are breaking into a new range here on Tuesday. Now, we have that Fed rate decision coming up on Wednesday, guys, so that's going to be significant for all of these markets. And as you can see right here, very clearly, we have the range highs back here, range lows, right around 115.85. If the euro closes below today, then we're looking at this new range here for the euro. Okay, 115.85, 114.50 or so. It doesn't have to be any more complicated than that. This is going to be resistance up here, and you've got support down here in this area. Now, a couple of other considerations here for the euro, and we've talked about all of this before. And by the way, guys, if you are enjoying this content, be sure to subscribe to the channel and hit that like button. So looking at, let's say, the 3-month time frame. Yes, 3-month, we're going back. This is a quarterly time frame going back to the 1980s. As I've described before, all the price action here prior to 1999 when the euro started, all of this back here, guys, is pre-euro basket of currencies. Okay, so all of this prior to 1999 is actually a pre-euro basket of currencies that, as you can see, still lines up perfectly here with this ascending channel. Okay, so lows off of this level down here, these two highs, this is equidistant. And you can see where the last few years, the euro has traded below this. Okay, now what could be significant here for the euro is the fact that we have June closing above here. Okay, so we saw June close above this level. And look, guys, it's very difficult to tell when a level goes back this far, 40 years. It's very difficult to tell exactly where this level comes in. But from these lows back here, okay, on the 3-month time frame, and also these highs through here, you can see that this level probably comes in somewhere down there around 114.50 or so, approximately, right? It's not going to be exact, but somewhere down here in this area. Now, keep in mind, too, that we have the monthly close coming up on Thursday. So Fed rate decision on Wednesday, monthly close on Thursday. It could be a very volatile few days here for this market. So that's first and foremost. But you can see here that on the 3-month time frame, like if I were to go into, let's say, the weekly time frame and take a look here. This is probably around where this level is. Again, it's very difficult to tell when a level goes back, a diagonal level goes back 40 years, exactly where that level comes in. But I would say somewhere through this area, okay, potentially as high as 115, right around where the market is right now, all the way down here toward about 114, 114.40, okay? So the bottom line, guys, this is going to be a critical area here for the euro as we head into that monthly close, because again, June did close above this level. Now, it doesn't mean that the euro can't close below and just head lower for the rest of the year, okay? I want to be very clear about that. At the same time, though, this, again, is going to be a very big test for this market. It is going to be a critical support level here for the euro. Okay, so, stay flexible going into that Fed rate decision and monthly close, guys. I can't stress that enough. You don't want to get complacent here and think that you know what's going to happen next, because anytime that happens, typically, right, the market is going to burn you. And if you guys have been around for a while, you know exactly what I'm talking about. But going into that Fed rate decision, guys, just keep an open mind. We are seeing the market once again break here within this new range. But again, this area down here at 114, 114.40, this is going to be a significant support area for the euro. And it's more than meets the eye, right? It's not just about this little pivot through here. It's about that level going back 40 years for the EURUSD. All right, so let's flip over now, guys, and take a look here at the DXY, because this is equally interesting. And again, we know that support down here for, the euro around 114, 114.50 in that region. And that's going to matter when we flip over to the DXY, because as you can see here, obviously we got a big Monday rally here from the US dollar, right? So following that tariff-related news, we saw the US dollar rally, leaving several imbalances back here. Now you can see this one over here started from this decline, okay? So this imbalance around 98.15 or so, this is what, again, I told VIP members that I was expecting the US dollar to satisfy that area within the first 24 hours this week. I did not expect the market to just continue higher, blow through all these areas, including that open gap back here at 98.61, okay? So no pullback here whatsoever, and that has left a few imbalances down here, guys. Sell side imbalances for the DXY. Now, it doesn't mean the market comes back there immediately and fills these in, but it is something to be aware of, because again, Monday's rally was so aggressive that you can see here we have several imbalances that have been left in the wake of that move. Okay, now the big test for the US dollar coming up is going to be these range highs from back here in June. Okay, so several highs off of this level. And you can see, again, we've talked about this before, but this is your mid-range through here where the DXY struggled back in this area. And this so far is serving as support, okay? So you've got support down here around 98.50 or so, and you've got resistance up there around 98.35. Again, going into that Wednesday Fed rate decision, guys, a big, big week here coming up for the US dollar. So there is a chance here, guys, that we see the market come up here, test this area. If we get bearish price action from there, then we get a rotation lower to come down here and clean up some of these imbalances from that Monday rally, okay? But again, keep in mind that, when you look at the EURUSD, right, this is going to be significant for this market as well, because you have this punching below 115.85. So it could be limited, right? It could be limited to areas like this down here if we see a rotation lower, okay? So you've got support down here, resistance up here for the DXY as we head into that Wednesday event. Now, obviously, if this market gets above here and can sustain that break, then we could be looking at a move back toward 100.8. And we get that by looking at something like the monthly time frame, going all the way back here to the range lows. Okay, so if we move all the way out here, you can see that 100.8, guys, is going to be a significant test here. We're not really that close to it right now, but with the way this is going, we could see this, materialize here over the coming weeks. Okay, so keep an eye on this area. This is also the 50% of this upper wick back here. So 100.8 is going to be significant for the DXY, but first it has to get through 99.35, which is going to be a significant test for the US dollar. And one other point here too, speaking of 99.35, right? If we look at this here, you can see that we have the top of this channel. Okay, so from this gap down back here, we have these two highs right off of that level. We've got this low and this low here. Again, this is an equidistant channel, guys. And right now, this level comes in right there around those range highs from June, around 99.35. So again, a very critical level here, a confluence of resistance for the DXY going into that Wednesday Fed rate decision. And keep in mind too, looking here at the DXY, right, the market is just below that resistance area. And looking at the EuroUSD going to the weekly time frame, right, this area we just talked about, the euro is just above that key support area that goes back 40 years. Okay, so this area down here for the euro. And then if we flip over to the DXY, you can see this area back here, right, for the DXY up there around 99.35, could be a little bit higher, but this general area here for the US dollar index is going to be significant. Now, one last thing, guys, I want to finish this up with. If this is going to be a macro bottom for the US dollar, okay, one thing to keep in mind here, if you look at the monthly time frame, right, this channel going back to 2011, looking at linear view here for the DXY, this is significant because if you look back here, macro bottoms for markets, including the DXY, typically take months. So this one back here took about 5 months. You can see where on the monthly time frame, we did just see the DXY go sideways here for 5 months, right? So very sideways market for months and months and months before we finally got some movement to the upside. So that's from 2011. And if we head over here to this other bottom, okay, 2021, you can see this back here was actually 7 months, guys. 7 months of ranging price action where we got the move up. Everybody thought the bottom was in. We saw another retest down here on the bottom of this channel. Barely a higher low, pretty much equal lows back there, double bottom for the DXY. Okay, so 2 instances off of this level that we've seen that. And so far, guys, this has only really been 2 months. Okay, so we saw June come down here, test the level, and so far July is rallying. But the thing to keep in mind again is, are we going to get something like we got back here in 2021, where the market spends some time down here over the next few months, which could also be even more likely considering that we are still in those summer months where markets tend to range. Okay, so whether we see the DXY rotate lower from 99.35 or test these lows back here on the monthly time frame and then give us that rotation lower, I do think that the odds of a few months of ranging price action here for the DXY are going to be more likely than just seeing the market bottom here and then just head straight up. Okay, I don't think that we get that, especially when you consider all these lows back here from over a year's worth of price action. All right, so that's the last thing there on the DXY, guys. If you are bullish on the US dollar, I would expect some ranging price action over the coming months. Don't get complacent and just think that the market is going to head higher, because that's not what we typically see from a macro bottom. All right, hopefully this video has helped. If it has, be sure to subscribe to the channel and hit that like button. Don't forget to join us in VIP. See the link in the description of this video for 85% off, or if you're on the website, click on that join VIP link. I will see you in Discord. Trade well out there, and I will talk to you again tomorrow.